Good morning, good afternoon, good night. Welcome back to another schema scalper video. Today we're going to be looking at the end of day range. So this is what I call end of day range, or the ICT London close kill zone. That's what we call it. The time is between 10 a.m. to 12 p.m. or noon. Let's get into it. So with this, during this time, the high of the day will usually form. Not every day, but usually. So we can see we're still doing the same 12 days range, 12 trading days range from 16 November to the 30th of November. I think that's more than 12 days, but okay. No, it is 12, my bad. 12 days, and we're going to be looking at the times from 10 till 12 and what end of the range they make. And at the end of the video, I'll go through a little step by step on how to find the complete daily range. And yeah, see there, high of the day 10:30, that's between 10 and 12, and the low of the day was made 3 o'clock, that's in the AM session, London session, whatever you want to call it, morning session. And you'll see there's times like this. This is a Friday. The high of the day is not made between 10 and 12. Or is it? No, it's not. This happens. That's why we sometimes, not all the time, we sometimes leave a portion of the position on in case we get moves like this that run further in the than the 12 o'clock candle, and they run higher and take out the highs of New York or London. And usually it runs up into like 130 to 230. That's the range that I got from study. But if it doesn't create the high of the day during this 10 o'clock to 12 o'clock time. Let's look at this one. This day, 10 o'clock till 12 o'clock. Didn't create the high or the low of the day. But yeah, again, like it's 13, so you can say like, or let's rather say between 1 and 3 instead of saying 130 to 230. 1 and 3, there's usually another high that's being made that becomes high of the day, like here for instance, or close to high of the day. At 2, it was close to high of the day. At 1:15, close to high of the day. Here 2 o'clock, low of the day. But this time during 10 to 12 has the highest probability of making high of the day or low of the day, or the other end of the range extreme, let's say that. Here this one didn't make it. This one made it. This one inside day, a really small day, probably like banking holiday or something. Okay. That one is at 10:30, high of the day. Ten till 12, high of the day. Next day, Monday. Ten till 12, low of the day. Big expansion. This one close to the high of the day. It's also actually the close of the day. The high of this London close session. It's the close of the day. For this day, made the low of the day, and did it make the high as well? No, 2 p.m. made the high. This one made the low of the day. The low of the day. Nine 30, 10. The low of the day happened just before, and that's it. So we have close to the low of the day, low of the day, low of the day. That's the close of the day, low of the day, high of the day, inside day, low of the day. That's actually close to the close of the day. That one close to the close of the day. Yeah. That one is inside, so I would ignore that one. And half the day. Boom 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 boom. Now for the juicy stuff. Now if you look at this chart and you're like, hey, dog. I'm gonna bring your food now. Just wait. Huh? Okay. Now for the juicy part. Hey, stop touching me. Wait. Go inside, otherwise I'm not gonna feed you now. Go to your bowl so long. Okay. This is the easiest way to explain it. Now, if you don't understand this, go back to and you finish watching this video, go back to the video that's titled The Power of 3. Right? You're gonna see this unfold now before your eyes. So it goes open, low of the day in London, expands up, creates retracement into New York, expands up, close of the day, London, close. So these 3 times are really important. See again, open, goes below open during London session, creates a low of the day, expands up, gets a small little retracement back into the London range, expands up again, and then the high of this range is not the high of the day, but you could close there in profit because it's above day open. That's, yeah, not the high of the day, but you could close there in profit. So it's open, expands up, creates, I'm not going to say the high of the day, but creates a high during London. It retraces back down below day open. So now we're below day open, we're looking for buys. So in New York session, we could close this if we're anticipating a reversal, or we could leave it, let it run to our stop. If it open a new position, we buy here, hold it until the high of London is taken out, and I'm not seeing any other points. I'm not going to look further left until the high of London is taken out, or until we reach a higher that's a higher high that has levels of liquidity or a pattern overlapping with it. Okay, so that's Monday. Tuesday, we've got open, down during London, buying there, holding through to New York, a retracement, small retracement, continuation up through to New York, creating the high of the day. Now, obviously, when this candle forms, we don't know it's the high of the day. It goes back down, and when it closes, or when it goes below the low that's made in New York, you can close the trade. You would close, maybe break even for that day. I'm not sure, depending on how you managed it, all of those things. So going to the next day, open, goes lower, you can buy, goes higher into New York, you can either close it here because you have half price open if you're anticipating a reversal, or you can wait for it to reverse, and then either when it goes below London, you'll get stopped out with a small stop, or you would have another position reversed in New York and ride out until London close. So you'd open there, price above, you'd sell, get stopped out, comes back down, goes back up, you'd sell, get stopped out, 2 losses for the day. That's fine, it's part of trading. So price would open, go below the low of the day, expand higher, have a little retracement in New York, expand higher, close at London, close at 10. So that's basically the blueprint. If you're doing like London session trading, which means 2 till 5 a.m., that's the blueprint. You want to watch for expansion, small retracement, another expansion through the London session, the 7 to 9 time, and then a close during the 10 to 12 window. That's literally the template. That's the blueprint, the template, whatever you want to call it. That's the way you look at this. Obviously these levels are, there's more to it, like where you would close, but if you understand this, and you understand price open, so midnight open, and refreshing everything to midnight open, I don't see a way you could over long term lose money trading. If you're buying below midnight open, having a small stop and riding that wave until at least midnight open and further, and pushing your wins, cutting your losses, that's literally all you need to do. Like here, open, stretch a bit above the high, you could have sold, but if you're below and you bought, you can close at the highs again, because it doesn't stop you out. Shouldn't stop you out. Let's see how far it went. Yeah, that shouldn't stop you at least 15 points. If you start to trade, at least 15 points stop loss. If you got that low, 15 points lower, you just close above the high and above the day open. The high of London and the day open. If you're not expecting a further expansion to previous day's highs or a multiple above that. Here, your day open, green candle, so it's the low of the candle. Goes higher, drops down. Now during this drop down, clears out all of this, all of these equal lows. So you're expecting a pushback up into the range. These equal lows and equal highs, expecting a pushback up and then a move down. So you could have been buying here until it gets back up and then selling. That's a bit techy. Or you could just wait until it goes back above the high and then you sell off. Sell here. If you missed that entry or you got stopped out and you're buying here and you got stopped out maybe here, you just wait for the next session for New York. You can buy inside here because it's inside this fair value gap. It will drop down and close. You can close it here at 10, which is below that New York session low. So that's just to get your money back for the day or whatever. Here, selling above the high. Boom, 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 riding it out, close there at 10. Or you could even, as long as you're closing below they open or you're getting stopped out above or below they open when you're selling, that's fine. So that's it, literally 12 days. These things, they repeat themselves so much. The only issue that is it's so boring that you want to try something new and you want to get creative, but that's not what you need. Boring makes money. You have to ask yourself every morning, do I want to be right this morning or do I want to be rich? And that's just how it goes.